Can you get laid off while on workers' comp? Workers' compensation insurance covers your employees' medical and disability expenses related to work-related illness and on-the-job injuries. Employer's liability coverage, which is normally included on a workers' comp policy, protects your company by paying legal fees and any awarded settlements should an employee sue you claiming that an illness or injury was caused by your company's negligence or failure to provide a safe workplace. Workers' compensation insurance is required by law in most states for companies that have W-2 employees and in some states for 1,099 contractors. Regardless of state law, clients often also require in their contracts that their contractors carry workers' compensation insurance. It's important to know your employee rights as well as the laws governing workers' comp in your state. Workmen's comp is regulated by each state's Department of Industrial Relations, Department of Labor, Department of Insurance, Department of Employment, Bureau of Workers' Compensation, or a similar state agency. Tech Insurance provides links to each state's insurance website for quick access to detailed information about workmen's compensation laws. If you have a one-person company, you may be operating in a state that does not require that you maintain workers' compensation coverage. However, your client may still require that you carry workers' compensation insurance. Why? In many states, unless a company can show that subcontractors carry their own workers' compensation insurance, subcontractors will be automatically covered under the hiring company's policy at the hiring company's expense. Contract employees, leased employees, and some other work-for-hire situations may be exempt from workmen's comp insurance requirements, but some state laws do require companies to cover 1,099 contractors. When you hire independent contractors to do work for you, you should require that they carry their own workers' compensation or assume that you will have to pay additional premium to cover the subcontractor on your own policy. My state requires me to carry workers' compensation insurance, and so do my clients. But what's in it for me? Workers' comp insurance medical benefits pay for doctor's visits, medication, diagnostic tests, therapy, or hospital stays that are directly related to an accident or injury that occurred while the employee was on the job. Additionally, the policy will reimburse the employee for a portion of income lost to work-related injury or illness. If the worst should happen and an employee is killed on the job, the insurance will pay death benefits to the survivors as well as some funeral expenses. So if your employee is hurt on the job and you have workers' comp coverage, you won't have to worry about paying those costs out of pocket. In some states, owners, officers, partners, and other company principals can exclude themselves from their own company's workers' compensation coverage. If you've got good health insurance and disability insurance policies, consider your risk low and want to save on premiums, this may be a good choice for you. In virtually every state, the insurance company can charge and retain a minimum premium when a workers' compensation policy is canceled. So if you buy a workers' compensation policy and cancel it 2 months later, you will still owe the minimum premium, which can be much more than the cost of 2 months of coverage. In some states, the minimum premium can run from several $100s to more than $1,000. So watch the fine print before you decide to cancel your workers' compensation policy and be sure it will actually save you money. Your workers' compensation premium depends on the number of people you employ and what risk classifications those employees fall into based on each person's scope of employment. To determine these numbers, your carrier will conduct an annual premium audit and set your company's workers' compensation insurance premium for the policy period accordingly. It is important to note that during the audit period, the carrier may adjust the premiums and findings from current period and make that adjustment retroactive to cover the employees and risk classifications that were incurred during your previous policy period. Audit mistakes can cause you to lose coverage or can unnecessarily inflate your company's workers' compensation insurance premium, so it's important to prepare. Designate a knowledgeable contact person for the auditor who is familiar with your employee's work. Be sure to provide accurate and detailed information, because without it, the auditor may assume the worst-case scenario for risk exposure and increase your premium. Review your payroll documents to make sure that they will allow the auditor to readily break out overtime pay and discount it back to straight time, as is allowed in most states' workers' compensation rules. Your payroll record should also reflect the actual hours spent by each employee in each of the different workplace exposure categories. Otherwise, all of the employee's payroll will go into the most expensive classification applicable. If your company uses 1,099 subcontractors, show the certificates of insurance documenting that they have their own workers' compensation insurance. It is very important to break down your payroll by state. If you do not provide the insurance company with accurate information about payroll you have in each state where work is done, the insurance company will very likely not pay claims that occur in unreported states even if the total payroll on your report is accurate. Be sure the person handling the audit in your office is aware of and has access to accurate information on out-of-state payroll and that the audit is fully completed.